Welcome to Magnet Minutes. It's Jordan Kimmel, and I'm here with my favorite guest. It's the legendary Jim Rogers, live from Singapore. And Jim, thanks so much for joining us.
I'm delighted to be here, Jordan. Good morning to you. Good
Well,
evening to you. Good evening to you.
good evening to me. I stayed up late. It's daylight savings time, but Jim, I'd meet you anytime, anywhere for some insights. And man, what an interesting time it is. And Jim, I'm going to just jump right into it because there's so much going on. We'll get into some of your background and some of your books if you'd like. But I want to mention, what everyone warns about and frets about is this terrible reminiscence of the 70s, and it happens to be in the 70s where you put up what is no doubt legendary returns with your partner. You had just basically the most unbelievable returns during one of the most difficult times. So we're not here to talk about the FANG stocks. There's a lot more to the world than a couple of large cap US companies. And what I want to get into first is for years, Jim, you've been warning so clearly too much debt. The low interest rate environment regime is going to change. You had better have your house in order. And here we are in probably the most interesting time, that I've been in the market, clearly. So we've just seen interest rates with a historic interest rate rise for a short period of time. Bank failures are starting. Jim, let me let you go. What's going on here?
Well, Jordan, it is always good to live in interesting times. That's the Chinese curse. I'm sure you know the Chinese curse to their enemies is, may you live in interesting times. And well, we're doing it. We're doing it. So whether we're cursed or not, we will find out. Some people love interesting times because they come out the other side very, very prosperous. I'm sure that you and everybody watching this show will come out the other side very, very prosperous. So congratulations to you. Congratulations to you. Having said that, yes, there are going to be more problems. I mean, we're having bank failures. We've always had bank failures. They're getting bigger and bigger now and more common apparently, and it's hurting more people. But Jordan, I mean, the expansion of credit, you mentioned it before, the expansion of credit is staggering here in the last few years, starting with Washington, D.C. And whenever you have staggering expansions of credit, it always leads to problems down the road. I mean, I don't have to be too smart to know that. I just have to read some. And throughout history, too much debt leads to more problems. Do I like it? No, I don't like it, but we have to learn to live with it and adapt.
Well, Jim, the expression was, Noah started building the ark before it started to rain. You've been, clearly talking about too much debt. In one of my favorite, parts in one of your older books, you weren't too kind to the Fed back then. That was Greenspan's regime, but now we saw a place where they had interest rates at 0% for this prolonged period of time, government spending, which really wouldn't end. And it kind of leads me back to where I first met you at Fox Studios a couple of years ago. I was sitting on a couch, and there was this guy talking about insurmountable problems. It turned out it was David Stockman, and a supply side guy talking about that they can't get the government to stop spending no matter what happens. And you couple that with 0% interest rates, the Fed buying every bond for sale, keeping interest rates at zero, saying there is no inflation. Well, I saw inflation, for years and years, and I went to baseball games when tickets were a few dollars and movies were a few dollars. It's always been inflation. Why has it been, Jim, that there's been a denial of inflation and denial inflation would return? I can't understand that.
Well, Jordan, if you're a politician, you don't get elected by telling people about the problems. You get elected by saying things are great and they're going to be better. That's unfortunate, but we live in a country where that's what people do. They say, don't worry, everything's going to be okay. And either fortunate or unfortunate, there are always some people who believe them. And when the government needs to, they make sure you have more money. If you don't believe them, they give you more money, or they lend you more money, or whatever. They steal money from somewhere and give it to you. And so you say, okay, everything is okay. I don't have to worry anymore. But let me tell you, Jordan, you should worry. Don't stop worrying.
Well, this is a moment in time where, the Fed, I believe, has made, historical mistakes since I've been in the business. It seems like, they're guilty of what, someone recently called oversteering. But, I also remember reading When Genius Fails. And that was the 98 period of time, long-term capital, degrees coming after degrees, PhDs, over leverage was the problem. Secret Fed meetings were the result. And Jim, I can't imagine that even with this interest rates, promise to go higher. Here's what I don't understand. I'm not sure, I don't really have a lot of trust in economists, so to speak, but the inflation that showed up, it seemed like a lot of it was supply chain. It seems like a lot of it is boiling off. Are we really in a period right now of persistent and increasing inflation like you saw in the 70s? Was this a blip? I know I'm still going to be worried, but I'm thinking, is the boil off and the hysteria started at the peak of interest rates going up and the peak of inflation? Or do you see something, that's years and years, and I'm too hopeful that there might be a peak right here?
Well, Jordan, nothing goes straight up forever or straight down forever. They go up, they react, they go up, they react, and that's what has happened and is happening with inflation now. The price of oil, grain, things like that went up a lot. People got scared. The markets are reacting, and so now the government can say, "See, everything is okay. We solved your problem." Whenever the government, I hope you've learned not to listen to the government. Please do not get your investment advice from the U.S., any government, including the U.S. government. So do not worry. Things are not over yet. We're going to have more problems down the road. But at the moment, since markets are down, grains and food and energy and other things, everybody feels better, and they will continue to feel better. But, Jordan, you're not old enough to remember, but the last time we had this inflation, which you mentioned, the 70s, before it was over, United States Treasury bills, 90-day Treasury bills, were yielding 21%. 21%. That's not a typo.
It's almost hard to believe.
I know it's hard to believe, but it's a fact. It's a simple, not a simple, but it's a very painful fact. It did happen. It killed inflation. Yes, 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 yes. But a lot of people got hurt in the meantime. But inflation had hurt, always hurts people. It was hurting them. So no, this is not over yet. I don't know when it's going to end. I guess I should watch you to find out more about when it's going to end. And when it ends, we're all going to have more problems. There are differences now than the 70s. The U.S. was a creditor nation in the 1970s. There was no there was the Soviet Union. Many other things have changed since the 1970s. So this time around, things are different in many ways. The debt is staggering, not just in the U.S., but especially in the U.S. We're now the largest debtor nation in the history of the world. They've printed huge amounts of money. They're printing more as fast as they can. Before this is over, we're all going to suffer very badly. Jordan, we're going to have the worst recession in my lifetime. And I'm older than you. So it's going to be the worst in your lifetime too, I assure you. It has to be bad. We had huge problems in 2008 because of too much debt. Jordan, look out the window. The debt since 2009 has skyrocketed, staggering everywhere. So the next problem has to be worse.
It's some tough meat to chew on, Jim. And it's funny in the '70s. I was in college, putting myself through college. I was probably having too much fun to recognize how big the world's problems were. And I got into the industry itself. I was selling tax-free muni AAA bonds at 10%. And people said, no, I'm going to wait because rates are going to go back up again. Well, there was this 20-year drive to zero. It's been, just a crazy ride. But Jim, let me just share with you, a belief that I have. And it's not this fancy thing that the bull market will come roaring back, but it was the '70s where you just put up incredibly dramatic returns. And there are opportunities, say, outside the stock market, shorting the market. It could be commodities. And let me just jump right into the commodity scene because a lot of really smart people who look at supply and demand and look at the travesty going on in Ukraine and the simple story was oil was going to $200 a barrel, and it went to 120 or so. And then since then, in some sort of, for me, unpredictable way, it's been lower and lower and lower. And you're a not only a contrarian, but you see around corners. I just want to ask you, you happen to come out with your book, Hot Commodities, the week before commodities bottomed in your usual timing. Um, what should we look forward to commodities? And there's all kinds of commodities. I know you talked about farmland, but let me, let you talk about commodities for a minute and maybe, make sure to touch on oil because that's what a lot of people are focused on.
Well, oil is people focus on it because it's the largest and most important to all of us, whether we like it or not. If nothing else, you've got your lights on in your building and you're in the room there and you've got a camera working. You
Yes,
need
I do.
electricity. You know where electricity comes from. It comes from oil or coal or some hydrocarbon, whether we like it or not. But no, well, back to the problem. We have shortages developing of many natural resources. Supply and demand are changing. We all read about electric vehicles. Well, Jordan, electric vehicles use several times more copper than gasoline vehicles. They use several times more lead and lithium and other things like that. So we do have changes taking place in supply and demand. And those kind of changes always lead to dislocations and often higher prices. So any commodity you look at, well, not any, but many, there are changes taking place in supply demand, and changes in supply demand always lead to price changes, usually higher. And when they go higher, that's called inflation, as you know. And if you want to do well during inflationary times, you own the things that go up in price, whether it's copper or rice or whatever it is. That's how you survive and thrive.
Right. Well, you know what? It's the most important thing to recognize is that there's more ways to invest than I like to joke for a couple of years, the world was infatuated on 5 to 10 US stocks. It was clear with the over love and the over infatuation that was going to change. But people are slow to recognize there are other opportunities. And one thing I just want to touch on, I'm just curious if you have any opinion on it. It probably is not a sweet spot for you, but a lot of people in the U.S., started talking about this ESG movement, this environmental social governance, and there's a big raging debate whether or not, some of it is clearly greenwashing, but some of it just seems juvenile. Although we all want, a good economy, we want good environment, we want, good stakeholder. The idea that we were going to move away from hydrocarbons into only windmills and so on, it just seemed juvenile. And I'm just curious if you think the ESG movement has had an impact on the way you think or an impact on to the detriment of people who kind of followed road down that path.
Well, it has to have an effect on everybody because people apply it to the markets. Whether they should apply it to the markets is a different question, but the facts are they do. And if people are applying ESG to markets and to investing, you have to be aware of it, whether you agree or accept it or not. So as long as people are thinking that way, yes, you have to be attentive and you have to look out for it. But Jordan, I want to say to you, I don't think anybody's against clean air. We're all in favor of clean air and clean water and good food. There's no question about that. But remember, it does come at a price. You know, when you go and you turn the light switch, you want the lights to go on. Well, some people are starting to find out in Europe, for instance, for a while there, the lights aren't coming on. And that's because they had closed many of the power plants. They did not approve of hydrocarbon power plants or nuclear power plants or whatever they didn't approve of. And for a while, there was not enough electricity. In the end, people are going to say, wait a minute, I want my lights. I want my electricity. And so I'm afraid that this may turn out to be a movement, successful, proper movement perhaps. But in the end, people are going to, especially if and when we have hard times again, people are going to say, wait a minute. I need my electricity. I need my car. I need my bus, whatever it is they need. They're going to say it's more important that I get to work in the morning than blah.
Right. And you know what? But we're going to take a quick break and we're going to come right back. But, I want to mention, I have a young son who's not a young son anymore. He's a gentleman. He's a businessman at this point. But Jim, I lost you visually. You'll come back, I'm sure. But what happened was he said to me, Jordan, Dad, there's not an energy problem. We'll have energy solutions. And with innovation, there'll always be the path forward. And, Jim, one last thing before break. I just read recently, before your time, in the early 1990s, I heard 1900s, about 1/3 of the vehicles on the road were electric vehicles back then. It kind of blew my mind a little bit. I had no idea about that, but 30% of the original automobile industry in the 1900s uh, were electric. It blew my mind.
Henry
So,
Ford's Henry
yeah.
Ford's wife had an electric car. She didn't like gasoline cars. She loved her electric car. Carry on. Sorry, carry on.
No, no, it's just it's an amazing thing where uh, the more you know history, the better you are. So we've already touched on commodities and interest rates. They're all intertwined. A lot of people are focused. They want to talk. They want to hear about where's the U.S. stock market currently, where is it going? And then I want to really bring up the subject to Jim, probably the greatest world traveler, the greatest knowledge of international markets. There's more to the U.S. There's more to the stock market than the U.S. stock market. But on our market itself, Jim, you've been talking for a while about the problems, what's going to come to roost. The last time we spoke, what surprised me was you hadn't really initiated too many shorts. This was several months ago. I'm curious where you stand, kind of what you see. And don't remind me you're not such a great short-term trader. I want you to look around the corner and tell me, 3 months out, 6 months out, a year out, what people kind of wish they were looking at or looking for.
Well, if you're looking that far out, I would urge everybody watching this to learn about selling short because it can be very prosperous and profitable for people at the right times in the right circumstances. So please learn about them. I'm not suggesting you sell short today or next week or anytime, but do learn about it because it can be extremely useful in certain periods of history. So learn about it. Or if you don't want to sell short, fine. Just learn about being conservative, going all cash or something like that. But
Right.
Jordan, if you go to all cash, you have to decide which cash. Is it US dollars or Icelandic krona?
Okay.
There was a time once when many people went into Icelandic krona because they were yielding very, very high profits. Then Iceland went bankrupt. So be careful when you go into any foreign currency, or
Right.
any currency, including the U.S. dollar. I see bad times coming again someday. I mean, it's been since 2009 that we have not had a very serious bear market in the U.S. That's longest in American history. It doesn't mean it can't go on forever. Maybe Janet Yellen is right, the Secretary of the Treasury in the U.S. She said, you don't have to worry anymore. We've solved the problem. She's got 2 Ivy League degrees, fancy Ivy League degrees, so maybe she knows what she's talking about. I doubt it. History shows she doesn't. So learn, be worried, be careful, watch Jordan, because the more you know, the more you'll worry and the more you will prepare.
Well, the thing is that I'm going to say that I have clients that are long only, but I also have an account where we do aggressively sell short, and we have lots of short positions now. Not completely, Jim. I want to bring up an issue of charts. It has to do with my magnet stock selection. We like companies that have big cash flow and trade at low price to sales. We love to look at companies with very high price to sales, declining margins, institutions selling, prices breaking down. And I don't think it's un-American or on anything to sell short. Um, Companies just get too bloated but one question I do have for you is I know that you are a deep, fundamental understanding companies and anything you do, extremely thoroughly. What I'm curious about with your history in commodities and the markets, I wouldn't think you use short-term charts too much, but do you use any charts or specifically maybe even point and figure charts, supply and demand charts, or is all of your focus fundamental?
I wish I could understand point and figure charts. Maybe I'd get rich someday. Um, I look at the charts to see what has happened because, if I start getting involved with X, I look back to see where X has been. And if I see strange things, I need to know why those strange things happen. But I'm not smart enough yet to learn how to make money from charts. I know people who apparently are very successful with charts. I'm not one of them, not yet. I guess everybody should listen to you, Jordan, and figure
Well,
out
you know what,
how. Go ahead.
Jim, I remember someone saying, one of the quotes was that they never met a billionaire that focused on charts. I think charts are helpful, but I also remember in another book, someone was talking to someone purely fundamental, and they asked them an opinion on a given company, and he said, "Let me look at the chart first."
Well,
So,
again, everybody has their own way, Jordan. I mean, don't listen to me. Don't listen to anybody. Figure out your own way and then do it. And if it works, hooray, do more.
right. Well, that's what I've done, Jim. But I've been around long enough to know that as soon as you think you have it figured out, and as soon as you think you're either smarter than the market or the smartest guy in the room, one of the things I like to say as a mathematician is I know that my foot fits directly in my mouth. And the most important thing you probably want to do is to remain humble. I blend my spreadsheets with my charts. It's telling me right now it is a dangerous time. It's a riptide psychologically. We're hearing people go from one side that rates and the Fed have to break the market. Other people are saying the number of new lows had shrunk a couple of weeks ago, and new bull markets in effect. Uh, the thing is to stay humble. And Jim, I've never met anybody with the level of success you've had, with the history you've had, who's as humble as you are. So I think part of your success uh, is remaining humble and doing your homework.
Jordan, if I'm humble, it's because I've made so many mistakes. I made many, many, many mistakes in my life. And every time I think I'm smart, the market says, sit down, boy, you're not so smart. Let me show you. When you think you're smart, you're going to close the window and go to the beach. You better get out of just close down for a while because the market's going to show you you're not so smart.
Exactly. So, on that note, I never pound my chest. I consider myself a student of the market. If there's any half hour I could ever get anywhere, anytime with Jim Rogers, I'll take it. So I want to remind people the segment, because there's so much going on. If anybody hasn't read Investment Biker, read it right away. If anyone hasn't read Adventure Capitalist, read it right away, not only with the stock market, but the history of the country, of the world. In every country, and what I love, Jim, is when you stepped into another country, you talked about 200 years of its history, to hundreds of years of its political regime, its currency. I think that very few other people were met by royalty, heads of states, presidents. I know I'm not going to make you blush too much, but one other thing I want to mention is that we have a new book. I have a new book out called Invest in the Now. You're quoted a couple times in it. Uh, Times that we're busy then. One of the things we like to do is ask people if you were able to tell somebody young, somebody new, somebody just getting started in investing, what would you tell them? Well, you have a book called A Gift to My Children. So this will be really easy when we do our second edition, Jim. I'm hoping you're going to contribute a little further with it. But the one last thing I want to ask, this is probably one of the harder questions. I look at my spreadsheets, I invest in the now, I know what I see, but what I'm not that good with is seeing around the corners. And so, kind of seeing what I should be looking at that I'm not. So if you could, there's two things I want to ask you. Maybe what should people be looking for besides the headlines? And then we know that when the bear market does gut everyone out and lose their interest, how would you tell people that the cleansing has been done and it might be time to, become a little bit more constructive and take positions in the market?
Well, let me answer that by giving you some general principles, which everyone should know about. And the first is that if everybody's thinking the same way, somebody's not thinking. You better at least go and look out the window and think about the opposite side of the boat or the street or anything else. Because I have learned, and I know you have learned, that when we're all thinking the same way, something is going to happen to show that we're all wrong. That's the way the world is, whether it's politics or sports or music, whatever it is, including the stock market. So first of all, be very careful if everybody agrees with you. And secondly, just don't invest unless you yourself know a lot about what you're doing. It's better to do nothing than to lose money. And if you don't believe me, try it. Just try it for a while and you'll see. Just do nothing until you yourself find something that you know is going to be successful because of your bank of knowledge, and then act. I mean, these are things that I try to teach my children. I try to teach my children curiosity. Those are the best things to be successful in life. I could say to you that you should become X. Well, that's wrong. You should only become what you yourself really love and you yourself are passionate about. I can tell you that such and such has a great future, but if you don't love it, you're not going to be successful. Doesn't matter, even if I'm right. But if you don't love it, it's the wrong place for you.
And you know what you're saying too, it's great wisdom. And what happens is that when you have your own belief system and you've done your own homework, there's just a different comfort level than when you heard an idea to barbecue, and then you're wondering whether that person has sold or what's going on, and you have no knowledge. You're just kind of floating on your own. So, I know that, from reading your books extensively and our great conversations, I know the amount of detail and homework you do prior to making investments. And that's probably one of the greatest, roads we can follow, is to follow Jim Rogers and his experience. So, Jim, let me thank you
Don't
again for your time.
wait, don't follow
Okay, I'm not going to
me.
sign off until you're ready.
Don't follow me,
Right.
follow your own self. If I tell you something and you do it and it goes right, you're going to think, boy, I'm smart. I really know. You're going to forget about Jim Rogers. You're going to think you're very smart. If it goes wrong, you're going to say, Jim Rogers told me to do this, and he doesn't know what he's talking about. The main point, Jordan, is if you invest in what you know what to do if it goes right, you know what to do if it goes wrong. But if you don't know why you bought it in the first place, you have no
Right.
idea what to do
Right.
next. So
And,
please stay with what you know.
right. And so, to be really clear, what I'm saying, Jim, is not to follow Jim's recommendation, so to speak, but to follow his path of knowledge first, doing your homework, understand what you're doing. That's the only way to feel comfortable. And I also believe, on that note too, Jim, a lot of people will blame their brother-in-law, their mother-in-law, or their advisor. But what you're saying is take personal responsibility to develop knowledge and then invest around the knowledge. And that's where I say follow Jim Rogers' advice, not necessarily a given stock pick or a given idea. So I think we came
Correct.
full circle, Jim. May we live in interesting times. May we live in some boring times too. That wouldn't be so bad. And I look forward to the next time we spend time together, Jim. And I really appreciate your time today.
Thank you, Jordan. It's been fun as always. Keep it up.
All righty. Thanks so much. And it's Jordan Kimmel signing off from Active Minutes with, he doesn't like to hear it, it's the legendary Jim Rogers. And we'll see him again soon, we hope. Signing off, it's Jordan Kimmel.